Okay, traders, welcome back. So this is a gold 15-minute chart you can see in front of you, right? So I've had lots of questions about how to identify a winning trade and a losing trade using the trend exhaustion principle, right? So when you find a trend exhaustion, you need to understand that you are going to have some losing trades. So this is gold again on the 15-minute charts. So what you can see is you can see a fair value gap here, and you can see also a fair value gap here. So why did this fair value gap hold and this fair value gap did not hold? So in this video, we're going to be going over and we're going to be answering that exact question. So when you use the order flow and footprint charts, you need to understand a couple of things, right? Not every fair value gap is going to hold, right? So we need to qualify our fair value gaps. And so how do we qualify a fair value gap, right? I get lots of questions about this. So if we just take a look at this losing trade to begin with, right? What we have over here is the way traders would mark this out, they would mark it out as an order block. And the reason they'd mark it out as an order block is because they might see something like this, right? They might see, oh, look, there's a breaker structure over here. So that would be a market structure shift or an MSS. So let's just label that. So traders would class this as an MSS. Then on top of that, they would see that price has left a fair value gap just over here. So this is the fair value gap that price has left. And also with ICT concepts, they may also project the Fibonacci tool. And they may use the Fibonacci tool like this. But what's actually happened if we play price on is that we ultimately get price hitting our stop loss. So why did that happen? Now, without even going to the ATS footprint charts, right, what you can see is that even though we had a breaker structure over here, what time were we entering the market? So if I just get out the Asian range, right, we were entering inside of the Asian range, right? So this is the Asia range over here. So this is going to be midnight to about 6 a.m. or 5 a.m. UK time, sorry. So if you're entering inside of the Asian range, my advice to you is to not enter inside of the Asian range, right? That is the most important thing to understand. So if you're entering inside of the Asian range, typically those trades don't normally end well. So I have very strict hours when it comes to where I trade, right? So even though this trade did have some validity to it, right? We saw price sweeping the Asian low, and then we had somewhat of a market structure shift. This here could be seen as the Judah swing. And yes, we left a fair value gap. Yes, we were in discount as well, but you're entering inside of the Asian range. So I personally wouldn't do that. Okay, so with that being said, if we go over to the ATS footprint charts, we can understand what was going on. So this is the ATS platform. It's the same exact chart you saw on gold on TradingView. So this is the same order block. So I'm just going to draw the order block over here, and we're going to really dissect what was going on inside. So when you come into a bullish order block, right? If we just go back to the charts, when you go into a bullish order block, what are you typically looking for, right? So you want to see price come in, and you're looking for a rejection. And so this rejection over here is what I've circled. What determines an accurate rejection in the market, right? So an accurate rejection in the market comes down to, in this case, a bullish rejection means that we see aggressive sellers. So I'm just going to write AGG. We see aggressive sellers that have not been rewarded. So we're seeing aggressive sellers and no reward, right? The no reward is very important. So what do we mean by that? So what we're seeing over here is we're seeing a large bid volume. So we want to see the bid significantly greater than the ask. This means that there's more aggressive sellers hitting the zone. Now, if we can stay above the zone, right, in this case, we didn't do that, but if we can stay above the zone, this corresponds to a reversal in the trend. So we see an exhaustion in a bearish trend to start a bullish trend, and we are looking to catch the bullish trend after the trend exhaustion. So with that being said, if we go over to the ATS platform, we can see and we can kind of understand what was going on, right? So yes, we did have aggressive sellers in the zone. We had aggressive sellers over here. We had aggressive sellers over here. So we can see red delta, red delta. So we can see significant amounts of red delta. But the problem with this red delta is that we can see the market continuing to head lower and lower. So we're not seeing the absorption. We want to see aggressive sellers entering the zone, but we don't want to see aggressive sellers breaking below the zone. So when price comes into a fair value gap, you are looking to see the aggressive sellers fail to break price lower, right? It's as simple as that. Now over here, we didn't see that. So if we just kind of clear our charts up again, what we're looking for, if we break this down just on the 15-minute chart, is this, right? So we're seeing the markets entering just like this, right? So we're seeing the markets enter, and we see a couple of red candles over here, some green candles over here. So in this region, what you're looking at is here. What you're looking at is this. You want to understand what was going on inside of this wick that I've circled. So I'm just going to replay price a little bit, right? What was going on inside of this wick? So this wick corresponds to essentially this wick over here. So what you can see is you can see a lot of aggressive sellers, right? So we see 53 for 5, right? So 53 for 5, that's over a 10x difference between the bid and the ask, right? The bid was technically over 10 times more than the ask. So we're seeing the aggressive sellers being present. Now, for a trend exhaustion that so many people are asking me, for this trend to be exhausted, you want to see a break to the upside, right? You want to see price break above the candle, above the fair value gap. Price broke below the fair value gap, which means there has not been an absorption of the aggressive sellers, right? Instead, we have a buyer that did turn up over here. We have some aggressive buyers, but ultimately price failed to break above the level and price broke below the level. So you're using the ATS platform and you're using order flow in conjunction with fair value gaps. What's even more interesting is that we had aggressive buyers over here, but those aggressive buyers failed and price broke lower. So when you see aggressive buyers failing, you don't want to be buying essentially, right? You want to see an absorption of sellers. We did not get that. That is the reason why traders may have taken a loss in this area. So on top of that, we also had the timing that was slightly off as well, because we are in the Asian session. So if I just bring up the Asian session again, this is the Asian session indicator, and you can see price was in the Asian session. So we didn't get the move we wanted. Now, we also had a move over here, right? So that was the first kind of losing trade over there. Now I want to go over an example of a winning trade. So what's going on over here? Firstly, we're not in the Asian session. Notice how price has given us the Asian session over here. Now, the way I use the Asian session is super simple. If price takes out the Asian range low, there's a high probability that when we have our entry confirmation to the upside, price will take out the Asian high. And that's exactly what's happened. So every day on your screens, you can go and backtest this. You want to mark out the Asian high in a red line over here. So this is going to be the Asian high, and likewise this is going to be the Asian low. And so what you're seeing here is you're seeing a sweep of the Asian low, and you're also seeing a fair value gap over here. So we see a fair value gap resting in this region. So this region is going to be the fair value gap. And so therefore our point of interest or our order block is going to be over here. So when price does come into this area, we want to see exactly what we were looking for over here. This is a losing trade. We're now going to see if we get our entry confirmation over here. So again, just to give traders some understanding of what I'm looking for, the same exact criteria played out. So we saw a break of structure or a market structure shift over here, right? So I'm just going to label this black line MSS, right? This is the market structure shift. Now we also have a structural low down here and a structural high. So notice how we've come below the 50% area. We are in a discount. And so when you're in a discount and you've tapped into an order block or a POI or a demand zone, whatever you want to call it. So for this to be a valid demand zone, what are you looking for, right? So from an ICT or an SMC perspective, we can see the market has swept the Asian low and we've come into a demand zone in the discount, sorry. Also, on top of that, what's important to understand here is that we can see the daily candle, right? So we can see the daily candle over here. So my PO3 settings by 2 degrees. What we can see is if we just understand this, when we don't use a New York midnight price, what we can see is we can see the high of the candle up here. Sorry, the high of the candle all the way up here. And we can see the daily opening over here. So if we just take this back to the New York midnight opening price, this is what I like to use. I like to use the New York midnight opening price, and I like to buy and take all of my buy trades below the New York midnight opening price. Now, with that being said, we don't want to be buying blindly. We want to use the order flow. And so we're going to be breaking down what was going on inside of this region. So we can see a rejection. So this is the rejection we're looking at, right? Everyone talks about rejection in order blocks, rejection in POIs. So what was happening here? So what determines the reversal of a trend, right? Why did the market reverse from this area? So this is now the yellow box we're going to be focusing on. So if we just go to the ATS platform, right? The ATS platform, you can trade directly off the ATS platform. So what we had was this. We saw the market giving us this same order block, and we're going to be studying this wick over here. Let's actually see what happened in this wick. So this wick is super, super interesting. So first of all, even though it's a red candle, you can see the majority of the candle actually had positive delta. So what does positive delta represent? Positive delta means there's more aggressive buyers than sellers, right? But what's interesting is we want to look at the final rejection, which was here and especially down here, right? So this rejection over here was what we're going to be focusing on. So this rejection, we can see a huge red delta, 116 for 13, 85 for 0. This represents an exhaustion of a trend, right? Exhaustion of a bearish trend. So again, if we go to the 5 minute or even the 1 minute, right? Let's go to the 1 minute and see what's going on. When we see an exhaustion of a trend, so when we're seeing the trend kind of end in this region, what we can see is we can see a sequence of lower lows and lower highs, right? So we can see a trend to the downside. So we're looking for a 15-minute fair value gap, we're looking for an absorption, and we're below the daily candle opening. This is what determines the end of a trend, everyone. This is what determines the end of a trend. So we have our timing, we have our fair value gap, we have our PO3 alignment. Now we're simply going to the ATS platform to understand the rejection of the sellers. So in this case, we see 116 for 13 and we see 85 for 0. So we have a large amount of aggressive selling over here. Notice how the market breaks above the zone, unlike our previous example where it didn't do that, right? So we can see a large amount of aggressive sellers fail. We also see the same thing over here, 67 for 18. We also see a 0 and a 0. So we see 2 0 prints. And so a finished auction is what we call this. So an auction is again between the bid and the ask, the aggressive sellers and aggressive buyers. What's actually going on is that the auction in this case has been wiped out, right? The 0 prints, right? 85 for 0. That means that there's 85 aggressive sellers and there's no aggressive buyers. This definitely means that the auction between the aggressive sellers and buyers have been wiped out. This means that sellers are aggressive, but the sellers in this case haven't been rewarded, right? Because the market on the 1 minute time frame over here breaks above the level. So this is what gives us the indication to look for sells, or sorry, buys. Right? So what's going on is that 85 for 0 happened here. So we have a lot of sellers and these sellers have failed, right? And we see that with one retest to the upside, but also the second retest to the upside. So what I would do, my personal entry would be at this level, and I'll be happy to have my stop loss over here. The reason I'd have my stop loss over here is that we don't have any fair value gaps on the 1 minute time frame. So I'll be happy to have my stop loss here, and I'll be happy to enter upon this level. Notice how I'm not looking for a breaker structure up here. Right? I'm not going to look for a breaker structure up here. You can, but you're missing some of the move by not trusting the order flow. So the order flow tells us that aggressive sellers have failed down here. So as soon as we break this level, you can have your stop loss here. Notice how we have a 0 or 1 for 0, which means the auctions have been wiped out. That means aggressive buyers are no longer present. And that means the aggressive sellers have been absorbed, they've been exhausted. This is the end of the trend. This is the trend exhaustion. And so we see that via aggressive sellers failing, and we see that when there's a 0 on the ask side. So with that being said, I'm happy to take a trade from this region, and the reason why again is because this level has held. Passive buyers are present. So I'm just going to write PB. Passive buyers are present because these aggressive sellers have failed, right? So this gives us indication that the fair value gap is strong, the demand zone is holding, and it is a valid order block, right? Valid order block, valid POI, whatever you want to call it, right? This is what validates our trade. And so from here, where do we target? So targets, again, very simple to understand where we target. We want to be targeting the Asian range high. So we just kind of bring price over. We want to be targeting the Asian range high. Obviously, pay yourself along the way, but you want to be targeting the Asian range high. So as you can see here, price rockets to the upside. So in this video, we went over the difference between a winning trade and a losing trade. So if we just take away all of the drawings and start again. Why did that first trade lose? Well, this first order block, simply put, it was in the Asian range, and the absorption of sellers did not happen. So here we saw, if we just write this down, we had bad timing, right? Bad timing. No absorption. And by the way, absorption is the most important thing because absorption is essentially the end of a trend. So bad timing, no absorption. Whereas over here, the winning trade, so this was roughly the winning trade from this fair value gap. If we take a look at this winning trade, this had every single context confluence in our favor. We had New York session right over here. So this was about 9 a.m. EST, right? So we had good timing. That's the first thing. The second thing we had, right, is that we had an absorption, right? We had what we call buyer absorption. right? And also we had our regular ICT liquidity sweep of the Asian range low, right? So if I just spell that right, liquidity sweep of the Asian range low. Another liquidity sweep that happened, if I get rid of this, was the fact that we had the previous day low that was swept, right? So price here took out that previous day low. As you can see, we had a previous day low sweep over here, and an Asian low sweep, and a break of structure, and a fair value gap, and we were below the daily opening price, and we had the absorption. So notice how I'm bringing multiple confluences together to take the winning trade. So if you find yourself losing or taking losing trades, just ask yourself, where are the confluences? Am I using the ATS platform, right? Am I reading the aggressive buyers and sellers? Am I reading the fact that the sellers here have failed to be broken above the level, which means this gives me the confidence to look for buys, right? Am I understanding what's going on with liquidity, right? Previous day liquidity, Asian range liquidity. Am I using the power of three to my advantage, right? These are all the different concepts you're going to bring together to make a winning, profitable edge.